with the plan. All right. This type of inducement is our second type and induces traders into seeing a continuation. The type 1 induces retail to see a reversal. This induces to see a continuation. So we could maybe imagine what that looks like. This occurs when SMC or retail gets trapped on the lower time frames and fails to see the higher time frame. Go ahead and take a second to draw this out, and then I will be explaining. Inducement type 2. This is where you will always get trapped on the internal trend. Type 1, we were talking about the main buying below higher lows to then go higher, right? This is different because this is when structure will actually maintain. Because if you see we have a higher low over here that makes a higher high, notice it actually ends up coming to the higher low and then going higher. Where's the inducement in this case? The inducement is when you have traders who are stuck on, it doesn't matter if it's the 4-minute, the 4-hour, anything all in between. If you're focusing on structure, but you're failing to acknowledge that it's a part of something bigger, you're getting trapped on the lower time frame, relatively speaking, and that could be any time frame. So what happens when you're seeing all these, oh, here's my lower low, lower high, lower low, you're seeing this as a lower high, lower low, and you're looking for your order block for sells right here. But you're failing to understand that you are a part of a bullish trend. So this is where your inducement is right here. Your inducement is literally structure. SMC traders wait for, oh, here's my order block, here's my structure break, here's my entry to go higher. This is where you will lose. The inducement, our trigger for entry is inducement. We get in before the move happens because we know where it's going to go. We don't need a confirmation because inducement is our trigger for the right order block. It validates it for us, not a BOS. So our inducement is right here. An internal lower low, trapping all the internal trend traders. After that lower low happens, what's simultaneously going to happen is it's going to be mitigating our order block. So we look to buy below higher lows for type 1. We look to buy below lower lows for type 2. You're always going to be buying below higher lows and lower lows. And here, what does this inducement mean? It induces hope for those who are hoping that you're going to continue sells. It's inducing fear, or it's inducing greed for those who are holding sells. They want to keep stacking on my positions in new lower lows. It's inducing FOMO for those who might think, well, damn, I had the wrong order block. This is where I want to enter now, right? It's inducing all types of traders in these different regards. So inducement is just structure, but tomorrow you'll be learning exactly which one. Because now you're probably wondering or asking yourself, how do I know if I'm going to be buying at structure or buying below structure? Good question. So you're focused on the internal trend in this case. In this instance, what happens is price to the left will just mitigate some form of order block that's not sell structurally supported. It's just going to be there random. It'll cause price to come back down to your extreme demand order block. And this is going to be your inducement that you're going to then go higher. So essentially, you're just going to have some form of low internally within your main range that's broken to then finish your main range target. All right. Now let's look at the sells. I'm going to cover these up to the left. Let's take a look at the sells. Sells. Compared to where we're looking to sell above lower highs in the type 1 example, sell above lower highs, right? In this example, we're actually saying that we are going to be selling at lower highs. We're selling within a range rather than selling above it and going lower. This only works when you have some form of high built before it. It's going to ensure that those who are looking, no, we have a higher high, now we have a higher low. These traders are getting trapped on the internal time frame. And they're seeing this, oh, here's my higher low, here's my higher high. Where are they looking for order blocks? Those who are buying. Here's my order block, that's going to be going higher, right? Again, this happens. Inducing traders believe the buys are going to continue to mitigate the main sell to then go lower. So all type 2 inducement is inducing traders stuck on an internal time frame to a main leg, getting stuck on this internal time frame. They're just going to be trapped into the wrong direction. And that's why it's so important that we always zoom out and make sure what the actual bias is. So we're not getting caught up in this BS. So the inducement is selling above a higher high. You're only going to be selling above higher highs and selling above lower highs. That's it. Always need a high to sell above and a low to buy below. Everyone type 1 in the chat if you're ready to continue. So we go through 2 examples, the video, a couple examples, and then the plan. It's 1:48 right now, so I would say 20, 25 maximum minutes. Awesome. All right. Clear this, we're gonna move on to the next. All right, let's watch this and then go right back. So compared to inducement type 1, type 2, we are actually going to be selling above higher highs and buying below lower lows. So compared to type 1, as you have now just seen and been illustrated, if you're looking to sell for type 1 inducement, you need to sell above lower highs, right? But if you're looking to sell in type 2, we're actually not trading continuation structure, but we're rather trading the continuation structural breaks to allow us to go lower. Same for the buys. When we're looking to buy, you're going to be looking to buy below lower lows, or in an uptrend, we look to buy below higher lows. So these are the 2 types of inducements. Now, let's see how it pertains to where price currently is. Well, what we can kind of see is that we are looking somewhat bullish right now. We have new buys taken, which is great, but let's look at where price currently is now. Based off of that type 2 scenario that we just pitched, where we look to buy below lower low, my question would be, well, where is the lower low, right? Where are we actually looking for a lower low inducement? Well, right off the bat, we can tell that we are going to be actually looking to buy right here, everybody. Let's think about it. Why am I looking at this low? Can you guys map out, again, if I'm saying over here to the left, we're bullish, that means internally, these are sells. So draw out the structure that tells you this is the right low we're going to be buying below. You guys can go ahead and illustrate that real quick and make it make sense. Focus on all the moves in between. Draw the structure. And Mr. Constantine, you'll see yourself. Can't start there either. You gotta start all the way from the left. Remember, everybody, we want it to look like we're selling within a main range. We want to identify why this is an inducement. If you're drawing everything all in between, guess what? Like this, that's not telling you anything. You want to make it look what we're going to buy below. So really, I mean, as you get some people identify, you're structured to make it look like this, right? To sell below. You can't do this, right? Because notice, this isn't telling you anything. This is literally not telling you anything about except other inducement. What you need to do is, all right, well, I have a high, I have a low, I have a lower high, I have a lower low. Again, main structure, because guess what? Within here, yes, then you're gonna have all this, crap, which again, more inducement comes into. But just wanted to get you guys to understand that I'm viewing this main bearish leg as the internal continuation for the inducement for then us to sell or for us to buy afterwards. In order for us to go higher. Well, if we look to the left, do we see any order block right here? Well, we do have an order block, and where is it? This has been mitigated. This has been mitigated. This is the only one now that is unleft unmitigated. We do, of course, have an order block here, but why is that not right? Well, because we have an imbalance just below it. So this is going to be the order block we're going to be paying attention to. So our refinement is going to come from this order block right here. And again, it always takes off some form of liquidity. It has a minor imbalance after, and that's where it needs to come back and fill. So now this is acting as the gas or the money that is going to be collected in order for us to go to the new direction or to target new stock, right? To target new stockholders, new on the contrary. So when we're in a long position, we can go ahead and just put our long position here. And this is a very tight stop loss, as you'll begin to understand. Our stop losses are really no more than 3 pips. And mind you, we're not doing our refinements right now. We're getting the concepts down. So where down do we target? Well, we look to target other areas of inducements or other areas of liquidity. So when we're looking over here, do we see any type of liquidity? Yeah, right. We see some form of relative equal highs. So we should be targeting at least right this high up here, and that becomes 1 to 25 pretty quick. And let's just go ahead and see what ends up happening. All right, so price just immediately tapped right for entry after collecting these stops, mitigate that order block, and it should just absolutely. And all the meanwhile, everybody, you're going to be able to tell the different types of liquidity here. If you have this, guess what? That means what order blocks aren't going to work. It means this one won't work. Why? Because you also have over here another key zone, right? Over here you have you have equal highs, also another key zone. That means none of this is going to work. You then have a trend line, which tells you what about trend lines? Well, we know that first one on the trend line at least needs to be taken out, so it should at least come up to here, and so on and so forth. I mean, it's always going to be the same. Always. It's always going to be the same as the meaning of how price slides basis, because this is where all the next area of liquidity is lying. So as you can see now, what price is doing is, of course, it's retracing just to come mitigate another order block, so it can then absolutely take off. So this now has become a very quick 1 to 25 RR. And of course, we know price always has to have pullbacks on between, and you're going to come to the point where you know exactly where it's going to pull back, how far it's going to go, how it's going to get there. And then this comes with being an exceptional master and having that skill set. And as soon as you notice, price immediately liquidates it. That's 110 pip return. We have 125 RR and phenomenal trade. But now let's go ahead and look for sells, right? So when we're in this scenario, let's talk about what we currently see going on here. Well, we look to sell above high highs, right? Or we look to sell above highs. So that tells us, just based off of this scenario, that we see, of course, one high over here. But we also see an internal high, right here, because this is that last high, that made the new low. So they tell us right now, we know is because we look to sell above highs, price is going to be looking like this. Right? We look to sell above high into some form of order block to the left, the price will go lower. Well, do we see anything above this high right here? Do we see an order block? Oh, there was one, but it was already mitigated. Where's the next order block? We do see an order block, right? There's an order block that is right here. So when we see this order block, this actually is going to come for entry. There's gas line for our order block. That's going to induce buyers to come to the marketplace, and then that's when we're going to be looking to sell. So if we go ahead and place our nifty tool, when we come to this area, now again, this is a much larger stop loss. We can refine it, but it's about the concept right now. Where are we going to target? Do we see any form of target that we would look for? Of course, we see some equal lows right here, right? So this is going to become the immediate target, and RR, it's phenomenal pips, but the RRs are great. We can refine this more so in the future, but now this is going to become at least a minimum target. But what we can expect is ideally we're going to be targeting even new lows, right? Our TP1, our TP2, and then price will inevitably continue to go lower and lower and lower as we continue to take more liquidity and we build more liquidity for it to target in the future. So with that being said, now price just absolutely sell off, and we're just going to look for price to do its thing, trust it, because we know the purpose, we know the intention, and we understand what's going to happen everywhere all the time. This is where you will start to develop that mastermind mentality, that mastermind approach. So again, order flow, order block, order block, order block, and then we'll of course get that release, and notice how it did exactly as the operations exactly as we said to the minimum. All right, and that is this approach, everybody. All right, so let's see here. Got a few more, and then we are good to go. So let's just practice some of these examples. So I get them to load up here on screen. All right, everyone. So based on this, right, what you want to do is mark out the inducements. Where are the pending highs and lows that need to be broken? So go ahead and identify the highs you would want to sell above and the lows you would want to buy below structurally. So just go ahead and take your best bet where you want to sell above, buy below. Don't wait for other people to go. Just do your best and let's see what you guys can come up with. And remember, think about inducements, right? What's the immediate high? What's the immediate low? What's the larger previous high? The larger previous low, right? And structure tells you everything. All right, so let's see. Great. All right, everyone, stop drawing on your screens. So let's see here, right? Inducement wise, right? Let's think about structure. We see that we have our main structure. We have a low, high, higher low, higher high. Boom. And then guess what? We had a shift from a high. It's now a new low. So based off of this range, where are the buy stops and the sell stops? Where are the pending structural breaks that price is going to come to? Based on the current range. Right? So based on the current range, we want to be selling above this high or buying below this low. But when it comes to a type 2, right, if we have a new range, which is right here, now what do we want to focus on? Right? What does a type 2 inducement look like? It's some form of high that forms internally for then it to come to attack the main range. So rather than getting gas from above the range like it does in type 1, the type 2 inducements will maintain the current trading range from the lower high, lower low, and it's going to build gas internally. Again, a lot at that, right? A lot of gas internally And it's just going to cause price to take it out to go lower. So there you have it. There you have your you have your main range, and then of course within your main range, you're always going to have your internal range as well. Again, right here, we got to draw the internal range. What does this look like? Well, you have internal BOS, internal high, internal low, internal lower high, internal lower low. Where's this broken? Broken over here. So you have this low, and then you have right a new high. So now we know based off of this, we're taking out a high, and these are the last two liquidity points: selling above this high, buying below this low, or selling above this high and buying below this low. So when you can understand inducement, it's actually going to create the pathway. It's telling you where liquidity is. We know where it's been. Now we want to figure out where it is. Now that we know where liquidity is, above here, below here, above here, below here, the pathway is already figured out for us. We know in order for us to go lower, we have to collect gas higher. We have to induce higher to go lower. Write that down. Induce higher to go lower. So we have to take out a high to induce buyers to then go lower. We know lower, we're going to go here and to go lower. And then it'll just rinse and repeat the entire process. And you're gonna get to the point where you'll be able to understand every pullback, everything all in between. And as you guys have all identified now, perfection, right? Boom, boom, boom. So it's all very logical, always the same thing. And in these examples, I didn't illustrate structure. This was made way back when just to illustrate the concept. But now after realizing this from the boot camp and the Drillgo inducements, you have to actually understand structure to understand inducement. Because if you're marking the wrong structural points, you're not going to understand the right inducement points because inducement and structure are one and the same. Great. We're gonna do one more example and then last thing. So over here, like we just identified the main leg, the main structure inducement, and then the internal structure inducement. So where is the liquidity? What low and what high are liquidity? Is liquidity above? All right, so let's see what you guys said. Exactly, right? We know that the liquidity is below. We have high, low, lower high, lower low. If this is a type 2, this is a type 2. What does this say about our main trend? Are we looking for sells or buys? If this is the type 2, sells or buys? Boom, right? Because we know the main trend is here. So we know that we have liquidity above this high, below this low. Internally, we have liquidity because this took out a new low. This is exactly what Mr. Juma illustrated. Now we have liquidity lying above here and below here. So now what's left to do is where's the order block? Right, and exactly as boom, that's it. You're taking out internal gas to then target your main high. And more so, we can know that price will come to here based on what? All of these equal highs, right? So it all kind of ties together, but inducement is a very algorithmic way of doing things. Buy below, hub low, target a new high. Buy below high, or sell above high, target a new low. Rinse and repeat. I'm keeping it surface level, right? Just so you guys can start to practice the application. But you need to know structure before anything else, right? So let's see here. All right, now let's do one more example. Last one. Ready? Everyone identify the last relevant structure points for inducement. So what high would we look to sell above, and what low would we look to buy below from the main structure, the main structure? Right? So good. Clear all drawings. Clear all, no mas. Boom, we know we're going to buy below here. Again, this is not a solidified higher low until it makes a higher high. But the reason we're saying this is because we have a high, higher low, higher high. This is our main range. But within our main range, again, if we're looking for buys for a type 2, we need to see some form of internal low to then go higher for it to look like this. So now if that's the inducement right here, where is the order block? All right, let's put it all together. Bingo, right? And then that tells you exactly what price is going to do. Then price takes out this low, right? Where's now our new liquidity above here, below here. So guess what? You can know with very high confidence this will come all the way back up to here. But more so because we have all of this equal highs. Oh, I have an order block right here. Okay. So what? Maybe just a small pullback, go right through. Okay, because it makes sense. Do you see what I'm saying? It has to make sense from the perspective of like liquidity logic. If it doesn't, it's not going to work. So then again, oh, here's liquidity, and then boom, ends up working, right? Awesome. And